So let's dig more about what or how should one be reading into the small cap rally. Joining us right now, Vinit Sambre, the Head-equities at DSP Mutual Fund, joining in the show. Vinit, hi, good morning. Hope you and yours are well and staying home as much as possible. Vinit, just wanted to understand, the attractiveness of the small cap story. And like I said in my introduction, we've fixated with what Reliance is doing, what Nifty is doing, but just look at the small caps. Slowly, they've managed to outperform the benchmark indexes. Is it because they were most beaten down? Or do you think the time has come when the attractiveness of small caps is looking meaningful from here?
Okay, hi, good morning, and thank you for having me on the show. We are doing fine. We are working from home, so I think that's the safest thing to do right now. But as far as on your question, which is the small caps as a category is concerned, so I think let me tell you that the small caps or the mid caps, they have been sort of underperforming for the last 2 years now overall as compared to the large caps. And particularly in this fall as well, post-COVID, we saw that the small caps particularly had seen much severe correction in that fall. So I think there is some amount of catch-up linked to how the markets have been behaving right now. And I was listening to Nikunj where he spoke about, there is a total disregard to what's happening on the economy as far as the market moves are concerned. So I think whatever euphoria we are seeing overall on the markets, that has also actually flowed into the small cap right now. We have seen some amount of catch up in terms of the valuation gap, which had got created because of outperformance of large cap. But overall, if you ask my perspective, because the small caps particularly were underperforming for a while, in terms of pure valuation norms, if we have to see the small caps are today trading at certain amount of discount to their overall average versus the large cap. So from that perspective, probably the category looks slightly better in terms of the valuation mix. But let me give you the overall perspective. My overall thought process is that this year is particularly likely to remain challenging. We are slightly more cautious overall on the market, given the fact that I don't see that people might have factored in all the negatives which one will have to sort of see going forward. Most importantly will be the first quarter numbers as they come out. I don't know how much of that is well digested by the market participants. Beyond that, we were already reeling under a low growth even before COVID as an economy. So even if this some amount of normalization is taking place, what we have to think about is we have to see much better growth numbers if we have to think about better growth versus what we were decelerating. So I think there are a lot of factors which makes the current environment a bit challenging, at least for the next 1.5 year, till the time we see normalization and better growth taking shape. And as far as the small cap category is concerned, I would say that for the small cap to structurally do well, it needs structural strength in the economy, and that is only possible if we have to take into consideration pretty long period into investment horizon. So 3 to 4 years is what we believe one should have in mind before looking at the small caps. These moves may be more short term in nature, catching up with the performance as compared to the large caps and the mid caps. And hopefully, if we cross the hurdles for the next few quarters, that's where one could take some longer term view on the small caps.
Sure. Vinit, what do you buy in small caps then?
So see, if you look at our portfolio in terms of the current segments where we are overweight, and this has been for a while now, it's not the near term, but fortunately these segments are also the segments which are doing well. So the likes of pharmaceuticals, agri-related businesses, specialty chemicals, some gold finance companies, some of the low-ticket consumer discretionary categories. So I think relatively these are the categories which are less impacted in the current environment. and we hope that in the next 1 year or so, as the economy is going through this type of an environment, these are the categories which are likely to do relatively better.
Vinit, let's look at what markets are telling you. Big is getting bigger, whether it is Reliance in India or HDFC Bank in India. And globally also, whether it's a Microsoft or an Apple. Are markets telling you that right now they are worried about not mid-cap valuations, but they are really worried about mid-cap valuations? Because typically when a reboot like this happens, big companies, efficient companies, which have better cost of capital, which are better automated, they are the ones who will make a comeback.
Right. So, Nikunj, I think that's the case across the board. I mean, when we fundamentally look at companies across the market capitalization range, this is one core parameter which we have to focus on. And please remember, there are so many categories in India where you don't have a large cap to play on. So, be it agri businesses, specialty chemical businesses, and there are a few others, building materials as a category. So I would say within some of these categories, one has to look for high performing companies. Within these categories, we have to focus on sector leaders because, like you mentioned, the large keeps growing larger. We are generally of the same opinion that companies which are running efficiently, companies which have leadership profile across the categories, and they have huge opportunity to play for many years forward. I think those companies across the board are likely to do well. So I think pretty much agree with you, but those type of companies are present across the board is what I was trying to say.
Vinit, when midcaps corrected last time, they started correcting, let's say in 2008, and the bull market started in 2013, 2014. It took 5-6 years for midcap stocks to come back. Assuming that the cycles are short-lived, because even in large cap stocks, the cycles are very short-lived now because of technology and because of algorithms. Do you think it could take at least 3 years for the midcap cycle to start again?
So I would say that if we look at the if you look at the moves and compare them, since 2017, I think was a peak of the market and specifically the mid caps and the small caps. And so it's been 3 years of underperformance already as far as the category is concerned. And so I would say that there is a low base which has got created, and like you said, it takes longer time. I am of the same belief that investment into small caps and mid caps particularly is a game of patience. It is not appropriate for all type of investors to participate. People who don't have appetite for digesting volatility or not having patience, I think for those anyways, these are something which are not advocated. But I would say that it's very difficult to say that it will take 3 years, 4 years, because in 2008, you are right, we were, our microcap fund, it used to be microcap fund earlier, which is now small cap. For 5 years or 6 years, it actually hardly gave any returns. And the 7th year is the year when it just shot up. So I think it takes a while to generate returns. Only thing is that we look for is the companies into consideration. They need to have potential for growth. If they are promising us that these companies are going to grow 2x, 3x, 4x in terms of the size from where they are and are run efficiently, we would say that at some point in time, the price has to catch up, and which is where the return generation or the value accretion has to happen.
From an investor point of view, Vinit, what are the kind of investors then who should be looking at small caps or this kind of fund? What would be an investor that would benefit then from investing in small caps?
Yeah, so I think clearly there are a lot of aspiring investor, young investor, enterprising even, and wanting to participate in India's great enterprising talent, because we have seen many small caps actually qualitatively grow from what they were when we had invested. And I think this is a true story of Indian capitalism, I would say. where if someone is really willing to participate in such companies, this is a category meant for those. There are a lot of investors who seek private equity funding, and they are willing to wait for a much longer period because those stocks are not listed. Just because these stocks are listed, they have price point to look at every day, which causes a lot of volatility in their minds, and that temperament are then not aligned. So I would say when they are looking at small cap as a category, I think they need to have a lot of patience, in their mind to remain invested and not get worried about the near-term cyclicality or the volatility of the category. So I would say there are a lot of enterprising investors with good risk appetite. The category is really meant for those type of investors, and there are really satisfying gains to be made out of the category is my core belief.
Okay. You spoke earlier about how there were plenty of pockets in the market where there are no large cap plays. But if we were to really buckle down and look at some themes that you do feel could start to outperform or catch up in the near term, what would they be? I mean, for instance, we talk a lot about pockets like chemicals or perhaps something else in the market on the back of the rural revival. I mean, which are the themes that you would be looking at currently?
Yeah, I think you said it. In the immediate near term, I believe the rural theme is shaping up quite well. The management commentary across these segments is pretty strong as of now. And beyond that, I would say that the pharmaceutical and healthcare as a category should continue to do well. There's one sector which we believe has been a laggard for a while now, and we feel that there is a good amount of low base which has got created. Automobile is one sector, so I'm not saying that immediately it starts reviving, but my sense is that the low base itself is a good starting point for the segment. It should benefit because of the social distancing norm, which most people are likely to follow, and that's one category which I would say has been reeling under some bit of pressure in terms of the valuations as well. So it's cyclically low, available at a cyclically low point. The sector has a good potential given the overall penetration dynamics, and also the new norms is likely to lead slightly better growth than than the past. So I would say that beyond what you already mentioned, auto and auto ancillary is one sector which hopefully should start picking up.
Okay, so auto and auto ancillary. Can I ask, Vinit, in terms of, let's say, a percentage return that's reasonable to expect, particularly, compared against the index, what one could look at, given that we're going through a difficult period, but what would you still say is possible for the small cap index or the fund going forward, let's say, over the next year or so?
See, it's very, as I said, it's very difficult to predict, 1 year or 2 year in such categories because there's so much also dependent upon what's happening to the broader economy as such. But let me tell you what we look out for in terms of the growth metrics, which can give you some, faint idea as to, how the growth should actually pan out. So when we are seeking companies in this category, we are looking for, let's say 13-14% type of earnings growth, bare minimum. We are looking for companies which enjoy upwards of 16-17% ROEs for themselves. And particularly these companies, as I said, need to have a long runway for opportunity and growth available. So I would say in the long run, if these companies, they keep delivering 13-14% earnings CAGR for a long period and run at a 16-17% ROEs, and they do not misappropriate capital, and there are no other issues of corporate governance, I would say, particularly over a longer term, the returns should keep matching the earnings track and the ROE somewhere in between. So I would say that should be the one thought which the investor should keep in mind while looking at the category or the fund.